Good afternoon, everybody. How are you? Thank you very much for hanging out with us here today. My name is Michael. If you didn't know that, I am the co-founder and co-owner here at backtothefuturetrading.com. And I want to thank you for coming by and checking us out here today. We believe, first of all, whether you're a futures trader or a forex trader, a cryptocurrency trader, or an equities and options trader, there is an answer for you. If you're asking, how do I have better entries? How do I stay in winning trades longer? How do I know when to keep my stops tight? How can I prevent overtrading? Is there a way to combat the fight or flight response, really challenge my self-sabotaging psychology? I can tell you, and hundreds of other traders who've left reviews for us can tell you, that there's an answer and solution here for you today. And as you've no doubt inferred from the sign behind me here today, it's all about time. In fact, the program that we're talking about is called Time Warp. It's our flagship product. We've had it now for almost 10 years. It's been in use all over the world in every major market, whether it's the ASI, the Hang Seng, the Nikkei, the FTSE, the Bund. When you want to know when moves are likely to occur and in what direction, we are the experts, and I think the leading voices when it comes to time signals. And so let me tell you a little bit about kind of how that works. Every Tuesday, when people come onto the website and they take our video demonstration, our trial, they're given access to 4 weeks of predictive times and directions in the markets that they choose to follow along with. Most people are looking at E-mini S&P or the NASDAQ, and then some people are looking at pound dollar or euro dollar, and some others are looking at Ethereum, for example. We also have ongoing analyses on much higher time frames that we're following week to week in the webinars. All of these things hold us accountable to the method and to you as the end user, because number one, it's not guru dependent. Number two, I can't change the signals. You've got them in advance every week. They're carved in electronic stone, so to speak. And number three, when we add up the results of the entries and the exits, the math speaks for itself. There's no hidden monitor where I'm holding out my really good setups from you. We're sort of all in it together in this experiment. So any questions at this point about how that works and kind of what we're looking for? All right, do me a favor. What I think I'm going to do this week is follow along with you and grab those forecasts and show you what was actually projected to occur. Why was I short, for example, at 324 this afternoon? First of all, what do you guys think of the markets today? Are you guys excited about the volatility that's back? People on CNBC and Bloomberg have been talking about, what is the Trump trade? What does it mean for us? What are markets likely to do? And all day, people have been making forecasts, projections, best guesses. And I think we're the only company that tells people to the second, to the minute, to the actual day when something is likely to occur. And so I wanted to show you really quick what was the reason for the short this afternoon from the high of day at 324. You see, 2 days ago, we published this piece of information. And I'll blow it up here so you can see it, but for now, let me just kind of correlate the two things and draw a circle around them so we know what we're talking about. If you look in the upper right corner of this histogram that we sent out to thousands of customers across the world, it says 1524 there. It says 1524 here. And then, Jeremy, do you notice where it says 1609 minutes? And it says 1609 minutes right there. Donald, can you see that? Well, this was added 4 days ago. So anyone who tells you markets aren't predictable, I want you to kind of hold that thought in a quarantine here today. And remember that 4 days ago, a program with over 12,000 lines of code, an available NinjaTrader indicator with over 10 years of use and 20 years nearly in business, told us to look for a move down at 324 until 409. In fact, if we come back and we look at all of these other times, the program was warning us, alerting us to the fact that there were anomalies that we may or may not be aware of. So at 7:33, 8:24, 9:33, 10:57, 12:24, 1:18, 2:03, 2:54, 3:24, and 4:24, the program was warning us that over thousands of bars recently, there were behavior patterns driving prices lower that occurred consistently enough that the program wanted us to be aware of it. And then vice versa here, from 6:18 all the way out to 4:09 Eastern time, the program found more anomalies, these times that it wanted us to be aware of. And so all of these times on this chart represent predictive selling times and predictive buying times. Does that make sense? For some of you, this is horrific news because you kind of get off on this idea that you need to be sitting in front of your computer all day, watching these signals one after the other, looking at every candle, watching every guru on every Discord, following every piece of falling crumb opinion you can get in social media groups. You're watching every ounce of volume, every trend line, every box, every Heikin-Ashi, every Mugu Gaipan indicator you can get your hands on. And it's exhausting. And so 4 days ago, I've been waiting patiently for a signal, 324. Now this is one trade that I took today, and I'm done. This is one trade that I took today. And coming in this afternoon, you know I'm not a big trend trading guy, but Dave, do you notice how the market had put in an all-time high right around, or a local high of day, right around 985? My risk on the trade wasn't very high. My risk on the trade wasn't very high. In fact, if I put it just above the high, I was risking $2. And I had a window of time available to me that told me historically there's a behavior pattern where prices fall until 409. And so at the end of all of that, waiting for that window to complete, we turned $2 of risk into $13 of reward, which is bananas if you think about it. Now, Donald, we'll grab that question from you here in a second. This is what I want you to see. These are the times that we were waiting for something to happen since 4 days ago. Since, what is that? Thursday, Wednesday, Tuesday, Monday. So since Monday, since 4 days ago, we've been waiting to see if lightning will strike another time. Now, why might that happen? Well, any one of a number of reasons. Institutions, evil as they are, I was listening this afternoon to commentators saying they're expecting JP Morgan to absorb hundreds of regional banks, small banks in local areas serving cities and towns. The consolidation of banks now in the presence of deregulation, which historically usually leads to very bad things in our country. Nonetheless, banks are going to be buying smaller banks than them to consolidate and expand their power and access to money that they'll lose and ask for more government money to replace someday. Did I get that right? I think so. And so those institutions aren't like you and me. JP Morgan isn't sitting there with an RSI or a CCI or the floor trader pivots indicator going, I don't know, I think I'll get in long here now, maybe, maybe not, maybe. They follow a procedure maybe or a process. They balance their books. The funds come in, they're taking profits. All sorts of things are happening at a commercial institutional level that you and I don't have access to. That knowledge could be the reason why sometimes these moves are occurring at these times. On the other side of the equation, you had men like William Delbert Gann say that life is sort of predeterministic, that things that are happening in the future were predestined to already happen. And that can get a little heady, get a little metaphysical, right? That's sort of eating brownies on a hill looking at a sunset conversation. So let's assume for now that it's banks following a process or a procedure. Donald, if we look at this, there are some things that we really sort of have to reconcile. Number one, a large percentage of the signals that we were waiting for something to happen, and this is from the Euro session forward. Let's look at the number of times where when we were waiting, for example, for an up move like 712 and 618 and then 757. Let's look at the number of times where the time we were waiting for something to happen actually produced, even if it was a small move, the move that we were expecting. You see what I mean by that, Jerry? I'm just putting arrows at the times where when I got in, it went up or down in the direction I was expecting it to right away. And this one here just literally went up a little bit, down a little bit. I'm going to count 309, and then I'm going to count 324. Now, the times that didn't work, let's be honest about those. 703, 824, 1224, 118, and 254, as well as 245. So I have 1, 2, 3, 4, 5. Can we count 733? I don't know. It opened and had this one candle up and came back down. Maybe we count 733. What do you think? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 times. And then 1, 2, 3, 4, 5, 6. Let's count 733 as not perfect. Let's say 7 out of the 21 times, Tracy, didn't work. Would you grant me that? Oh, and this is the unemployment report here at 8:39. So 7 out of 21. That's 2/3, or 67% of the signals went where we thought when we got there 4 days later. So Tracy, you're spot on. We're going to be talking about that here in a second, actually, because part and parcel with the times that I gave you, I actually surrounded them with a trading system. In fact, you'll see we'll be showing how the signals can be traded by using one of two simple entry rules called signal with trend or the puncture trade. And then I gave a video in advance of today's webinar for people to watch. Did you have a chance to see that? Yeah, well, we'll go through it together. But Tracy, what was the news today? The news was pretty important, right? It was unemployment, pretty big one. So what happened to the signal right after the unemployment report at the open? You see there? It fell right from the high. And then it came down to the next signal at 10:03, where it went straight up, back into 10:57, right? Immediately from the low of that candle. So I don't know that the news influences price so much as price influences the news. My personal opinion, and this is only after having watched this now for nearly 20 years, is that the people who are in control of the reports, who know what the information is long before you see it, have already set their orders in. They've already baked those positions in days or weeks before we get to that report. Do you believe that's possible? Yeah. What do they say? Buy the rumor, sell the news. Well, what did they do today at the open? Pretty good numbers. They sold the news. Okay, so let's look at it in terms of what Tracy's talking about. Let's look at it in terms of a trading system. At 618, our 120 period moving average, per the video that I give you guys for the last 10 years, I haven't changed it, but probably should change it. Tracy, when I'm above it, I'm looking for longs. So right off the bat at 618, I'm above the 120 period moving average, Quincy. And now I have a stop. What's my stop? My stop is 1.5 times the average true range of a 3-minute bar. And this indicator was created by Wells Wilder, I think in the 80s, to measure how big bars are on average as we move throughout the session. And so as the volatility increases, the stop required to trade those signals increases, right? And then, Quincy, as things start to slow down at the end of the day, the stop gets smaller. So entry rules require us to A, filter for trend, and then B, enter on the close of the candle. Our stop will be 1 tick below the white or 1 tick above the blue line, depending on what side we're on. So theoretically, we're entering at 618, we're exiting at 703, and we're banking nearly $9 in that first move. Quincy, at 712, we enter at the close of the candle. Our stop is below the white line, and we exit by 733. I'll put the winning trades up top and the losing trades down below. At 8:39, right after the report, we enter long, and womp womp, we hit a stop. Did you know stops are a naturally occurring phenomenon in trading? It happens. So now at 9:33, we're above the moving average, and then right here, Quincy, that candle closes below. Let's pretend we had the chutzpah or the account size to manage this risk, where our stop goes 1 tick above to 2 ticks above the candle which crosses over the moving average. Oh, I forgot 757. I'll come back to that. Now, Tracy, I'm short at the close of this candle, and I exit by this candle at 10:03. So this signal in the video is called a crossover, because the candle started out above the moving average at the signal and crossed over the moving average. Does that make sense? So we put our risk right above the candle that breaks that ice and closes. Perfect. Now, at 7:57, close of the candle until 8:24. Get there real close. There's 8:50. Okay. Now, the next signal is at 10:57. It's above the EMA. We enter at the close of the doji. We exit at 12:24 plus 850. We enter at the close of 12:51. We exit at 118 plus 6 ticks. Enter, exit plus $2. Enter, exit minus 3. Enter, exit, basically 0. Thomas writes, yeah, Thomas, Euro Open. The 6E might be a good one. The pound futures instrument, the pound currency would be a good one to try that time of day. Sorry to hear about that. So, Quincy, Tracy, did that make sense where we got in and out? What we've been doing is exploiting these windows that are opening and closing, that are opening and closing. And we're using time to manage to keep our stops smaller, and we're using them in this instance in a very basic way as a target. So remember earlier I said this addresses the worst parts of ourselves because now we're sort of working with a framework that addresses the darkest parts of ourselves. Now, I've been a part of a lot of live demonstrations this past week. How many of you saw me on the NinjaTrader live event with Tom Schneider? Jim is the other guy. Anybody? Yeah. So Tracy, did you notice that as I explained it to him with live trades running, Tom still pushes back on me a little bit? If you noticed, he still doesn't want to believe, even though I've shown him. We come into the webinar and here are the next times and directions. And Tracy just following those in real time, it's like a $500, $600, $700 net at the end of the half hour. And he still fights me. You see, there's a part of you that doesn't want to believe this. There's a part of you that really kind of resists this, if we're being honest. So I don't know how to add it up here. We'll just do 9, 13, 21, 41, 50, 51, 53, 50 minus 10. Let's just call it 40 points overall. Just really rounding down. That's $40. That's a $2,000 day per contract. Of course, hypothetically. We're not talking about real trades here. We're talking about hypothetical. Yeah. And so that's kind of neat. Now, that's only one of the setups that I taught. There are 2 in here. Ready? We'll come back in for round 2. The second setup is called a puncture trade. And there's actually a few puncture trades here today. And here's how the puncture trades work. Ready? When I'm above the moving average, and we had a lot of these in the live training room this morning, I'm watching the stop, Quincy, of the counter trend time. Now, here's something that takes one extra thought to make sense. If a counter trend signal fails, we can use a double negative logic, right? If the sellers we were waiting for don't show up, then that means most of the traders are what? Anybody? It's almost a rhetorical question, but I want you to answer it for me yourself. If the sellers don't show up, who's there in spades? The buyers. If the selling signal doesn't work, it's probably safe to buy. Now, watch, we'll come back to the chart. If we break through the stop of the counter trend trade, I put my order, my buy stop, one tick above that blue line, which is 1.5 ATR values away. So I'm just outside the noise of the market, the background noise. I'm 50% away from the size of one 3-minute candle. And then it moves one tick past that. Now, Tracy, here's what I do. Same thing as a crossover trade. And this is in the video. I put my stop 2 ticks under that candle, which now broke through that buy stop. And this becomes a puncture. See, I teach people whenever I can to follow the trend. Most of the customers that I've worked with, when someone says, well, why do you sell this if it's so good? What most vendors would tell you if they were honest. As an engineer, I would tell you, I get to learn how the people who make the most money with the things I build are using the tool. I get to see how people who are making the most money with the thing I built are using it. And nearly 2/3 of people who say I'm net profitable, I'm a profitable trader, I earn an income trading, will tell you they follow the trend. So I'm looking for every excuse I can to follow the trend. And the failure of a counter trend signal is a trend signal. So now let's add up these, because there's a few instances of them, right? I'm long here and I exit by 618. Now, someone inevitably always asks this question. They say, Michael, at the end of the webinar, in the beginning of the webinar, can't I just trail that signal? Can't I just move my stop up from critical moment to critical moment to critical moment? Absolutely. What I'm doing here and what I've done every afternoon for almost 20 years, 50 webinars a year, is give you the times to see, hey, did they work more or less 60 to 70% of the time? So on the one hand, did the thing we were expecting to see happen? And then B, if we put very, very, very basic rules around them with a mechanical discretion-free setup, was it profitable or a horrific mess after 2 days? Right? If you don't have rules, this isn't anything of use to you. There's no benefit because it's me saying words. How many of you followed those vendors where they make up stuff as they go along day after day? When you go to file for your refund, he goes, well, did you follow the rules I had on Tuesday? Because I changed them on Thursday, and then I sent out my update on Friday morning. And you're just like, oh, I see what this guy's doing, this lady's doing. I can't follow it. There's no rules. Okay. The second puncture is pretty short-lived. Let's come back over to the charts. You're doing great, by the way. Thanks for hanging in there with me. I promise you it's worth it. We actually have a 3-minute puncture. It comes through the blue line right here. Quincy, my stop is just under the open of that candle, but now I exit 3 minutes later and I get a whopping 7 ticks for my trouble. Okay, so we're up to, what is that, $7? $8 extra. No punctures, no punctures. Oh, there's one set for stun. We come over here at 12:24. It's going up, and then ding. That's a failed selling window, which means the buyers are doing what? They're kicking butt and taking names. And so I put my stop just under that candle that broke through and punctured that blue line. How long do I hold it? Until the next buy signal at 12:51. 1 puncture, 2 punctures. And now from here to here, that's $7 more. So we were around 2,000 being generous, hypothetically, and now we're 8 plus 7, 15, 500, and $750 more. Yeehaw. There's a little baby puncture right there. There's a little baby puncture right here. It goes through the blue line. It's 6 minutes. You get another $2. Womp womp. Now, listen to me. I'm going to whisper this. Don't tell anyone I told you this. There are moments in my live training room where we've introduced a third type of setup. It's called an aggressive counter trend, ACT. Aggressive counter trend. Because Donald, every once in a while, like this afternoon, look, the stop on a counter trend trade doesn't have to be the full distance to the line. So if you decided, hey, there's structure to the left of me, ding, I can put my stop just above it and see if this thing drops from 324 to 409. Or at 203, if there's a prior swing here and a prior swing here, and the candle closes there, and the stop is way up here, Quincy, let me try to get to 2-to-1 RR. Does that make sense? There will be instances and moments where I can try a counter trend signal with very little amounts of risk and see if it's going to work. So if you're a top and bottom trader, guess what? There's a place for you in our universe. Any questions about this so far? Let's take a look at the heartbreaker. You know who she is. She's called the E-mini NASDAQ. And when we look at most of the signals from the open, I want to just direct your attention to it. I don't want to spend too much time here going through it all again. But Quincy, Tracy, can you see what starts to happen in the afternoon? How about half of the signals are right about dead nuts near the actual highs and lows of the moves? And if we start following the trend, yeehaw. It's kind of silly, right? The one signal here, well, hey, let's just follow it through. 923, 932, we've already hit the stop at that point, so I'll just lock that there. Minus 13. 940 closes, it hits the stop. Minus 60. Aggressive counter trend at 949, I put my stop right underneath that candle. Plus 37. Now look, from the close of this candle down to 1004 is plus 147. So you're 73, 170, you're up $100. Yeah. So the aggressive counter trend here fails, minus 30. This signal fails, minus 52. And now the puncture gets to our break-even state because it's $1,000. Anything over $500, I go to break-even. So that one is basically a break-even trade. NASDAQ, sell $46, and now things just get silly. Plus 20, plus 35, stop out, minus 35. Signal with trend, plus 15, signal with trend plus 26, signal with trend plus 41, signal with trend plus 32, signal with trend plus 10, signal with trend plus 20. Yeah, it's kind of cool. I think it's cool. I hope you guys think it's cool. I'm pretty stoked when we look at this stuff together. Also, we can check other markets like the metals. We had the times for gold futures out there in the public consciousness. These were the signals for GC on a 5-minute chart today. And then if we go back and look at yesterday, these were the signals for the European Asian session. And then those were the signals, Tracy, for gold yesterday. And you start to get a sense that somebody had a plan at 2 a.m., 2:55, 4:10, 4:40, 5:30, 6:40, 9:15, 10:40, 11:05, and 12 o'clock. And this is a point where I just want to remind everyone, you probably would have figured this out on your own. Most traders, when they trade for 10, 15 years, they sort of intuitively know what time of morning it is, and they're looking for moves, looking for reversals. We all know a guy like that, right? Market goes up till 10:15 unless it was going down till 10:15, and then it might go up at 10:15, and then we're looking for a reversal move between 10:15 and 10:45, and it's these 15, 30-minute windows that are impossible to trade. And then you get here for gold and you're like, dude, it's 12 o'clock and I have a long window until 12:55. It's very precise. Okay, now we can also look at some of the other markets. These were the signals for today's Euro US dollar. Forex trading is one of the hardest things to do, and we would be buying or selling. What do you think today? If you were a Forex trader with the Euro US dollar, that's right, you'd be selling 150 to 250, stop out at 355, stop out at 535, short from here to here, and then long from here to here, and then that's your big move of the day. 11 o'clock to 12 o'clock. Big move on the Euro US dollar. Makes up for all the other losses. Here's yesterday in the Euro US dollar. So Quincy, dollar's getting stronger and stronger. You're shorting from 425 to 555. You're shorting and womp womp, you gotta stop out. Here's your trade, 8:55 till 10 o'clock. If you kept going, 10:40 to 12 o'clock. 1, 2, 3 shorts, 3 out of the 4 shorts worked. Pretty cool. Let's look at the pound. Same thing. Trade of the day was from 10:45 to 12:10 today. You had a good run at 325 too if you were up early. 840 at the unemployment report stopped you out right away. And then yesterday, using the signals we gave of thousands of people in advance, similar circumstance. You were shorting the pound all day. From the moment of the European Open here around 4:15, which is 9:15 London time. If you're a Forex trader, you're short, you're short, you're short, and again, and you can't help yourself. You're just shorting it over and over again, even little baby shorts. And 12:30, you finally have a stop out. Yeah, and so you asked earlier what time frame works better. It's the same accuracy, Quincy, on all the time frames. The same way that a Fibonacci retracement works the same on a 5-minute chart. So if I asked you, does a Fibonacci retracement work better on a 5-minute chart or an hourly chart, or is it the same? Your brain would, I hope, say the same. Can I use a 50% retracement on a 30-second chart or a 30-minute chart? Which one works better? The same. The tool doesn't care. And because time is a naturally derived study, just like Fibonacci levels are, right? The time frame that we're watching is irrelevant to the accuracy of the signals. So the better way to answer your question earlier was the time frame that you're naturally resonant and comfortable with is the one that you should be trading. Let me give you a good for example. Bitcoin is in the news. I've been hearing about it all day today on Bloomberg. I'm just going to connect real quick to Coinbase. And when was the last? Oh, that completely shut NinjaTrader down. All right. Yeah, Bitcoin was like, don't look at me. But one of the things we talked about in the NinjaTrader Live episode was how the signals for Bitcoin have been tremendous, just 100% in terms of every one of the buy signals. If you added to that position, you kind of had this bonkers growth curve. Let me see if I can actually, I'll do it without connecting to that data feed again. Yeah, here we go. So Quincy, Tracy, these were the daily signals on Bitcoin, right? And so that last move opened at 87,455 and has gone $11,510. The move on the 4th made it $20,841. The move on the 1st of October to the 24th of October was $73.25. The move from the 18th until the 21st was 1,308. This one here, you actually lost money, about 2,200, and this chimichanga here, you made about $2,400. The one before it, you lost 47. So you lost about 7, but you made 25, 1,300, 7,000, 20,000, and 100, and I'm sorry, 11,500. What are we talking? What are we talking? And if you go down to the lower time frames, it's doing the same stuff that the other markets were doing. Here's today and yesterday. So it's doing the same things that we just talked about. Puncture, exit, long from here to here, long from here to here, long from here to here, and so on. Puncture, small loss, stop out. Short from here to here, loss. Short from here to here, gain. Let's take a look at some bigger markets together. I know a lot of you look at SPY, for example. I wanted to make room for that today and just sort of show you the way we look at these markets and sort of interpret them and understand what's happening. So here's SPY on a daily time frame. We'll look at Qs in a second also. But if you're an options trader, just imagine if you could know when to take a call and how long you could trade it to get into the money. So December 6th, January 11th, March 13th, April 11th, May 3rd, June 3rd, July 26th, September 9th, October 4th, and then November 7th were opportunities for calls in SPY. If you were looking at the Qs, very similar circumstances, right? Very similar circumstances. If you're trading SPY intraday, same thing. Go down to a 60-minute time frame. We'll load a little bit more data. and then we go down to a 5-minute time frame. You could trade SPY intraday on a 5-minute time frame. I don't trade options futures. We do have someone that I work with. His name's David Quincy. He could probably let you know what he's doing with futures and options as well. I know he does a lot of work with stocks too. Like, for example, he's watching stocks like Microsoft. We can take a look at Tesla and get a feel for when those moves are expected up or down. From what I'm seeing here, it doesn't look like, Tracy, that the Cybertruck saved him. It doesn't look like his association with President Trump. Investors at Tesla are not very confident in the fact that he has a shiny new toy to play with. And we sort of knew that 245 today might be a great place to look for puts. Now the daily chart seems to tell another story. I have mixed feelings about the settings that I use for tech stocks. There's one other setting group that I start to reference when I look at the daily time frames. I'm just going to change over to that. And so that's sort of a more accurate assessment of when the times are for Tesla now on a daily chart. E-mini S&P also on a daily chart with those settings I find works really well, and I'm proud of those settings and happy with them. So long from the 21st until December 3rd. Let's take a look at some of the other markets. You guys remember what I said in the NinjaTrader Live on Tuesday this week. We were watching that signal from the 11th. I'm sorry, the 12th of November, and the next signal here is the 21st of November for oil. And so we sort of see this range that oil is in right now, right? From here down to here. And we're coming up into that range right here around 72.21. I suspect we're going to get close to it here by the 21st with all the shenanigans in the Middle East. And that'll be another opportunity for a potential short in oil back down to 67.70 and 63.91. Let's take a look at gold. Again, same thing. Gold was one of those signals that we've just been killing it on this year. The last signal was a long with trend on November 13th, and now we're coming up into the 25th, about 4 days from now. And one of the ways I measure to see how far gold might actually go is to see how far it's gone historically. And so if I measure all the moves in the past, watch this. I can come over here and connect them to the low of the move and see how far we've gone in relation to how far they usually go. Kind of a novel concept, right? We'll take these last two and then we'll look at it together. And what does this tell you about the exertion level of gold right now? Well, when that low came in and it started to reverse, we see clusters. We knew that the minimum it was expected to go was somewhere around here. We know that the median was somewhere around here, and that the maximum is right where it is. So we've just about exhausted how much we could expect gold to go. But we have until the 25th. So I would be looking for range-bound patterns now here in gold inside of that 2650 to 2675 area as we move back and forth here. Probably a puncture of the high as we come into the 25th, and then a possible second pull down. Let's say we're in that area, back to the EMA at 2500 and possibly below to 25.30. No, Quincy, you know what it's like? I liken it to my traumatic gym moments growing up. Remember when you were a kid? I'm 53. When I grew up in middle and high school, for gym, they made you run around the field. If it was nice outside and the coaches didn't want to do anything in gym, they would tell you to run around the chain link fence of the school. And you had the super fast kid who was like a track star. And then you had the average healthy kids. And then you had me. Me and Bill. And we would walk, and you could tell where we were because you'd hear, ah, I'm gonna stink all day. Ah. So you had a maximum, a median, and a minimum. And what we can do is reference what's the maximum moves that the large players are making in gold when it's time. What's the average or the median move they make? And then what's the smallest or the minimum move we can expect? And that can be pretty handy, right? It can be pretty handy as we come into those moments. We can take a look at some of the more obscure markets, the less traded. For example, we could check out bonds and see that as the dollar starts to work its way up, now that we're in this range on 115.16, and we're kind of tucked in right here coming into the next drop down just around Thanksgiving. So Quincy, it looks like if you're a bonds trader, knowing when those drops are anticipated can be a benefit for you. And now you can sort of reframe, right? Reframe your plan and have an advanced plan before you get there. Yes, Quincy, that's actually very true, right? And then you can look at notes as well, which it's like watching paint dry for me, but some of you love it, you live for it. It's loading a ton of data here. But while that's going on, you sort of understand there's this hope. Oh, I'm not sitting here glued to the monitor. So the doji looks like a doji. That's a bullish engulfing, bearish engulfing. Oh, what does it mean? And so you can sort of have a plan. NinjaTrader is not happy that I've tried to load 10 years of bonds and notes, so we'll just leave it there. But I think it's pretty cool that you can have this approach and kind of tackle it. See, what most people try to do, right? If you're looking at these other markets, let's take a look at the Dow real quick. And what I used to try to do was look and see, okay, is there a channel? Is it going to break the channel? And there's this girl on YouTube now. All I do is draw trend lines. Oh, that's all you need are trend lines. Oh, when it breaks the trend line, oh. And I'm like, it works for a little while until it stops. And then you ask her which trend line to trade. How do you know which trend line to draw? If 100 traders are looking at your chart, would they all draw the same trend line? Well, no. Okay, then it's not a system. And so for me, it's like having a chaperone, right? So if I'm looking at this, I say, okay, aggressive counter trend, stop right above 933. I'm going to get in at 939. That's 161 ticks, or $800 move right after the open. And then I will take a long with a stop just below the low, and it fails. I give up 19 ticks. There's a trade in my room called a double tap. Well, I'll give it a second chance to come back up, and I'll go long until 954, 131 ticks. At 954, I will get stopped out and give back 67 of them. I'll give back 127, and now watch. 147, 31, 111, 60. Aggressive counter trend trade, stopped out, I give back 17. Signal with trend, 15. Aggressive counter trend trade, I get stopped out, I give back 17. Signal with trend, I give back 8. Stop out, I give back 37. Aggressive counter trend, I take 42. $10.21, it wasn't a puncture because it was a failed buy signal. It was a failed buy signal. And sorry about the size of the font. It was too small for me to read, which means it is absolutely too small for you to read. There you go. So, any questions about that? And you're not, forced to stay on the time frames that I gave you, but the purpose of the webinar today was to, if you're a 10-minute, 15-minute, half hour, you look at multiple time frames. The reason I gave everyone all the times on the small time frames is that you have a wide basket of did it work, did it not works to evaluate. If I had given you 4 signals and half of them worked and half of them didn't work, there's no real trust developed there. But if we're looking at 31-minute NQ signals and 15 of them are at the exact high and low within a few ticks, now your brain starts to go, oh, I get it. That's how they're screwing us. They're using time. They're using time. Any questions before we start to come around the corner here and wrap up? You've been really good about the kinds of questions you've been asking, and so I really appreciate it. At the end, we're trying to discern, is this something that provides an edge? Yes. We took times and directions from 4 days ago, and we applied them to a chart in real time with very basic, very simple rules. No settings changes ever. Tracy, I'm using, listen to me, I'm going to say this because I forgot to say it. I've been using the same settings in this software since it debuted 7 years ago, 10 years ago, I forget which. Haven't changed them once. I've been using the same moving average for 20 years. So the settings that you see me use each week never change, because otherwise, what am I doing? You know what it's called, curve fitting. And if I change the settings every week to make the software look better, how do you back test it? You can't. So we have a back test from a customer from 2020 or 2022. And these are the same settings, Quincy, buying in the direction of the trend, exiting at the next signal with the settings that I'm showing you here today. These are 24/7 Globex trades. So that's from 4 years ago. We don't change settings. You can, but I don't. Yeah, Mark Douglas, he brings us to a place where we evaluate, right? He brings us to a place where we have to say, am I exploiting an edge over time, or am I shooting from the hip and trading like a blue-haired grandma in Las Vegas? 90% of people are the latter, not the former. And so when we come back and look at these signals today and add up the profit and loss, it's obvious that it provides an edge. I think it's obvious that it provides an edge. And then you ultimately have to evaluate, what is trading? Is it guessing based on something that just happened? Or is it really leaning into it and saying, what is about to happen? Right? What is about to happen? And we base our about to happens on patterns, behaviors that emerge from data that we can't see with the human eye. Because like I said on Tuesday to the NinjaTrader Live guys, this is my philosophy. You are a football and a rugby match, and the referee blows the whistle at 9:30, Monday through Friday. You are a sock in a commercial dryer. Ding, 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 ding. Oh God, please let me get profitable today. And so we've sort of made this choice to follow what the enemy does. If JP Morgan earns $3 for every dollar they pay in a fine, I'm going to watch to see when they're about to push the market up and down. Am I going to get it 100% of the time? No, but I don't need 100% of the time. Douglas taught us that. You just need an edge. If they're that careless that they leave enough crumbs for millions of traders like you and I to pick up and trade with, we'll exploit that edge as long as they leave it there. And they haven't done anything differently in nearly 20 years of being in business. The people that have come before you, as we wrap up here, just want to thank those of you who are leaving these reviews back for others to follow. We're now back at 4.7 out of 5. If you have an experience with the program and you'd like to leave it there, please let others know how you're doing. And we can just sort of scroll down and get a sense of whether or not the program is doing what people who sat in a webinar like you say that it does. Completely different than anything you've ever seen. Thank you, Carter. Time Warp works. Excellent software from Venus. Thank you, Venus. CJ, stop looking and settling for indicators that don't work or are lagging. These are experiences from people who sat in the webinar and saw what you saw and see what you're seeing and turned around and started trading with it. We actually have a Skype group of people who are sharing their entries and exits with each other. I'm particularly proud of this guy. His name's Gabriel. Gabriel's 21 years old and learning to trade so he doesn't have to work at a McDonald's the rest of his life, so he can afford a home someday, right? We have our rock stars. Darian, for example, put some numbers up on the board today. He made $1,300. This is a real person who bought the software. Average winning trade, $217, 100% win rate today for Darian. Great job. You guys know Ken. Ken put up $9,000, almost $8,700 today. That's a real account with a win rate of 89%. These aren't typical, right? That's really high. But they're coming in, and these people are sharing what they're doing, sharing what their settings are, sharing their workspaces and their template. And that's how I know it works. When other traders can teach other traders what they're doing. Wah! Ken looks at this screen and he sees if it's all green, he only takes longs. And he'll tell you where to get this and how to watch it. But the traders that are helping each other are now taking it far beyond anything I could do. And that's what I wanted. I wanted it to be generational, to skip beyond me to an apostle phase where other traders find traders that are struggling and share what they've been doing with each other. If you'd like to have this for yourself, it's pretty simple. You go to the website, it's backtothefuturetrading.com, BTTFT. We based it off the movie, Michael J. Fox, Doc, right? He goes into the future, he gets what? The sports almanac. He brings it back so he would know the scores in the future for the rest of his life. He could make money because the game's already happened. The premise of our company is that you can know with a statistically relevant edge of certainty what the game scores will be up to and including that one trade you saw me in at the end of the session today, short from the high to the close. These things, if you allow yourself to believe it, are moves that have already happened in the future. Remember predetermined, predestination? The longer you use the program, the more you believe less and less in coincidences. and you realize, oh, I'm traveling in time. I can see it from one side back into the other. So the program is called Tachyon Warp. You'll see it here. It's our flagship product. And I'll put that link in the GoToWebinar chat box. You can click on it. I'll save you some hunting and pecking there. So let me go ahead, paste that into it. And good news is there's a coupon code here for you, so sit tight. The bottom of the page is a buy now button, and when you click on it, there's this pop-up that shoots up right here. I teach a live class. I'm the co-founder, I'm one of the owners here. I've been using the software longer than anyone you've ever met who's had it. And so I bring my experience, my ability to demonstrate, to teach and explain to a live market environment 3 days a week. We look for setups, we try to find them. We had some pretty good setups today. And so if you like that sort of hand-holding education, someone who's with you for a little while, try it for a month or two. I don't want you in there forever unless you think I'm funny and handsome, in which case, right back at you. But you should see those markets live and watch those signals together with somebody and ask questions when you have that opportunity. If you don't want it, don't get it, click on go to checkout without the training room. It's only $200 a month. We have a $200 minimum daily goal each day. We were up, I think, in the second or third trade today, pretty quickly again. Terms and conditions, promo code WARPOFF. WARP, warp off. Hey, warp off. Warp off takes $500 off the price. You can hit checkout and use your Visa, MasterCard, credit cards, or you can go down into your PayPal and pay that. If you want to use PayPal's pay later, you can do that as well. And if you qualify, they'll let you spread all the payments out, I think, over 6 months. But for $24.95, you get 2 lifetime licenses, access to our video training archive, access to our live Skype trading group with over 300 people in it now and growing each day. You get lifetime updates on your NinjaTrader 8 indicator. This is local to your machine. We don't touch it. It's not our data. It's local computation. And if you die and want to transfer the license, or you make $1 million and want your neighbor Fred to use the software, it's a fully transferable license in the future. We'll be happy to give it to whoever you want to use it. 4.7 out of 5 Trustpilot rating, and again, full transparency, actual customers with actual credit card receipts leaving those reviews. The market you trade is not random. We've been proving it for almost 20 years. And if you've had this suspicion that there's something off, you have this question, why do I keep getting stopped out? Why do I get out too early? Why am I giving it so much room when my entry comes with my stop? Why do I get out after 2 ticks? Why am I trading 50 times a day? Why do I fail my Apex evaluations and my funded prop firm account evaluations over and over and over again? It might just be this. It's been the answer for a lot of people, and so I hope you'll consider it. We're the only company that gives you the software, the setup, the workspaces, the templates, the training, the discounts, and everything we do is based on truth. I won't lie to you. I don't have any guile in me. I'll get a little disgusted and angry sometimes if you don't believe me in spite of everything you're looking at. That's just because I want to shake it out of you. I want you to see what's really going on, and kind of at the end of the day, realize that there is an answer to this question. There are institutional patterns in the markets that you trade, and this program can help you find it. Thank you so much for your time here today. I appreciate all of you. Here's the sad thing. Several of you are going to leave this webinar, and you'll have the times for tomorrow's market right now. Here's the E-mini S&P from today. We already have the times for tomorrow over here. They're there. They're already here for tomorrow. And you're going to struggle, hunt, and peck, and overtrade, and get stopped out a million times, be paralyzed, not take the trade when it's time, be disgusted when it goes without you, get in too late, fear of missing out, all that stuff, when you had a better solution. You could have known when to be at your computer, when to be away from your computer, when to keep your stops tight, when to let your winners run. You could have known all of that. And so if you're choosing to go the other route, maybe what you're doing isn't trading, it's gambling. These times are EST, but they'll be local to your computer time when you install it on your machine. If you're in Zimbabwe, it'll show up in Zimbabwe time zone, Pacific Central, wherever you're at, wherever your computer's set to. All right, thank you for your time. I appreciate all of you. May the wind be at your back. May the sun shine upon your face. May the valleys rise up to meet you. May the mountains lay low before you. I wish you peace. I wish you prosperity. I wish you joy. I wish all the things for yourself that you wish for yourself. I stand in agreement with you. I believe in you, and I know you can do it because I couldn't, and now I can. This was the hardest thing I've ever tried to do, and I've built, together with my partner, a machine for you that I believe exposes the truth and puts it on the screen for everyone to see. It's theirs for you to grab. If you don't grab it, I got no sympathy for you. I got nothing for you. But I believe in you, and I know you can do it. I love you guys. Thanks for supporting us. If you're here as a customer, don't forget to join us for live trading room next Tuesday. If you need the link for it, ask me, Rachel, Ron, Dave, Drew. We'll be happy to provide it for you. We'd love to see you in there. We're learning great things and taking lots of ticks away from people who've been taken away from us for years. You learned something today. Keep learning, keep pushing, keep moving. Don't stop. Every day you're learning and you still have more in the account. You still have somebody believing in you. You still have hope and momentum. Don't stop. You got here. You're right there. Keep going. If it's with us, great. If it's someone else, great. Don't stop. You can do it. Have a great night, everybody. Take care. I'll see you next week.